Sarabjit Kour Nangra, VP Research Angel Broking, is now joining us. Ma'am, your view on Cadila after this warning letter, was it on the expected lines?
It was a surprise for us, at least, though the street was expecting it. Because for me, I mean, the 483 actually didn't contain much of serious actually issues which couldn't have been resolved. So we were expecting on a personal front that it will not result in such serious issue for the company. And apart from that, since it's been a year also, and the level of observations were not so stringent, we believe that it will be able to clear through actually. So it's a negative surprise from at least from my perspective. And apart from that, though in terms of numbers, I'm yet to get a clarity from the company as to what is the contribution. But definitely it's one of the bigger plans for the company. So the future prospects will be, to some extent, will take a hit, though they have done a couple of site transfers in the last couple of years. And those precautionary things are there. Apart from that, they have an SEZ which has taken an approval. Then they have another injectable plant at Baroda which is coming up in July next year. So they have enough defense mechanism in place to make sure that it doesn't hit them that badly. So that is my call as far as business perspective is concerned. And on terms of stock, actually the stock before this crash happened or before the news came in was already at around 25 or 24 times FY17, which is quite expensive given that Cadila is not so consistent as its other peers. Though it is consistent in terms of profitability, but its growth sometimes keeps on varying and margins keep on showing some kind of variability. So 24 times, even though it's a large cap, it's pretty higher. So after the correction also, I think today it's corrected roughly around 10-11%. I don't see a great chance for long-term investors to get into this stock because I believe it's already trading near fair valuations. And with pharma companies going through such event risk on a very regular basis, I think for an investor, it's better off that they get into these stocks only when such events happen and they are available at attractive valuations. So this is the case with many companies like Dr. Reddy, Ipca Labs and Sun Pharma, which I don't see happening in Cadila. So far as my rating goes, it will still remain neutral. Though I don't think number-wise they need to take any drastic step because they still have the time on their hands before it turns into an import alert. So the numbers will not be impacted, but I guess valuations are still demanding even after correction. So this is the broader perspective I have on the stock after the event has happened.
Right, but for Cadila, Moraiya facility, the dependence on US growth coming next year was too high from this facility. Don't you think that's why a person or any investor should just wait before he goes into buying this particular name, because the dependence of this facility on US and US growth going ahead was very, very high?
See, that's what I said. There's no hurry for an investor to get in Cadila. That's why I gave you the names of other pharma companies where these events have panned out and the valuations are attractive. That's what I said. Even if I factor in impact happening, which I don't think should happen because they have still time on their hands, and also I doubt they will stop selling the products in US from this facility. Though that clarity only management can give right now. But in terms of valuation, this doesn't provide even comfort even after the fallout. So I'm not telling investors, I'm still neutral on the stock. So we are not telling investors to get into the stock even after the crash.
Right. Generally the management would say that their Buddy plant, which has recently got FDA approval, they are setting up one more plant, which could also see US FDA approval coming in. You think they look for site transfers? But again, site transfers may happen, may not happen. It may take some more time. That is a big risk. Maybe despite the action plan that they would be having for that.
See, this is a normal defense mechanism any company will go through. Even we have seen in case of Sun Pharma, their bigger drug was blocked because of if they couldn't have launched it, and it wouldn't have saved Sun Pharma if they wouldn't have done site transfers. So companies understand the need that in today's time where USFDA is very stringent and plants are inspected every other every other fourth day, I mean, after 2-3 years, then it becomes imperative for companies to, take such actions wherein they increase their asset base also along, so they're not dependent upon one particular drug, particular plant, and also not particular few drugs. So site transfer is a natural defense mechanism. So I don't think that should be an issue.
Right. Sarabjit, thank you so much for taking out time for us. Always a pleasure talking to you.